Live from Sydney, I'm Paul Allen. This is Insight, where we dive deeper into the stories that matter with crucial context and sharp analysis. Well, stocks and treasuries rise as oil holds near the past month's lows after President Trump says talks with Iran on a ceasefire and reopening the Strait of Hormuz are proceeding, even as security remains unclear. SK Hynix and Micron top trillion-dollar valuations as AI memory demand drives chip shares higher and higher. Samsung is joining the rally as it looks to avoid a labour strike.
I think it's more about productivity and capacity. Now, if we can use that capacity to serve our clients better, gain more share of wallet, grow faster, grow more, then the impact on costs and jobs is going to be less. Now, if we cannot, and this is an industry-wide topic, then of course it will have ramifications and implications on costs and jobs.
UBS APAC President Iqbal Khan says AI can boost productivity, but warns jobs are at risk if that new capacity doesn't lead to faster gains. So, how will AI reshape jobs and policy making? Former Chicago Fed Chief Charles Evans and Nobel laureate Simon Johnson are going to join us live from the UBS conference in Hong Kong. All right, let's take a look at how markets are tracking today. A little bit of weakness in Hong Kong. We're off by about 2/3%. A little bit of weakness in China as well. The CSI 300 weaker by just a few points. Elsewhere, though, this rally just keeps on rolling on. Nikkei better by 1.25%. Seeing some modest gains here in Australia as well. We just had a slightly better than expected CPI reading, so perhaps suggesting more evidence that the RBA's going to be on hold for a little while. The Kospi's where it's all happening again, though. We've got that index better by almost 5%. And as I mentioned there, SK Hynix and Micron now joining the trillion-dollar market cap valuation club. You're seeing SK Hynix just keeps ripping higher and higher, doesn't it? 11.8% higher today. Samsung Electronics also better by 5.7%. Now, I mentioned central banks there. We've seen a hawkish shift by New Zealand's central bank. That's underscoring growing risks for global bond markets. The RBNZ warning the borrowing costs may need to rise to combat inflationary spikes from the Middle East conflict. Now, the turbulence in the bond market is also creating a critical test for US Treasury Secretary Scott Bessent as surging benchmark yields deliver severe economic headwinds. The Treasuries market has been hammered since the US went to war with Iran 12 weeks ago. Energy costs are soaring, pushing 10-year yields up more than half a percentage point and leaving Bessent with few easy options to soothe the market. Well, let's get some more on all of this from the UBS Asian Investment Conference. It's underway right now in Hong Kong, and there is Chief North Asia correspondent Stephen Ingles standing by with our next guest. Steve.
Hey, thanks a lot, Paul. Our next guest is Charles Evans, the former Chicago Fed president. You served in that role for 16 years, sir. So we have you on as the expert on what's going to be happening in the next FOMC meeting. Obviously, there's divergent opinions right now with the inflationary impact from the war factoring in maybe a hike instead of what the White House might want as a cut. How do you read what the new Fed chair needs to do?
Well, that's a great question. I mean, inflation has been above the Fed's 2% objective for 5 years, going on 6 now this year. And most recent Fed summary of economic projections says that it's going to be above 2% next year as well. So that's 7 years. Fed Chair Kevin Warsh comes in and he's inherited the inflation issue. Yep. And it's his to sort of address. The most recent commentary from Fed participants seems to be that they're impatient with the pace of getting inflation down. The previous statement language, which sort of leaned into most likely another cut, 3 dissents at the last meeting, and now more speakers have come out and kind of said, yeah, I think that there's upside risk to the funds rate too. Downside, but also upside. And Governor Waller's been an important contributor there. So the take that the adverse scenario with the war taking longer could have those inflationary implications.
Well, Christopher Waller was just saying on Friday that he's basically making it clear that there's just as much case for a hike than a cut. right? So
that's right.
So where does the new Fed chair Warsh have to listen to? Does he, the Trump administration wants cuts. Maybe those other 11 members on the FOMC, he needs to build a bit more consensus.
Yeah, I mean, let's be fair. Fed Chair Warsh is going to come in and he's going to take stock of, how everybody is thinking about the economy and about inflation. I have confidence that he's going to choose a course that is true to the Fed's 2% inflation objective. And that could mean that, one thing, it could mean that you're just sitting at the current funds rate for longer than you expected if you thought that things were going to be better on the inflation front than it currently looks. It could be that there's a rate hike ahead, but it also could be that all of a sudden things are resolved in the Middle East, oil gets pumping again and comes out of the Strait of Hormuz, and maybe inflation comes down a little bit better. I think that Chair Warsh is going to listen to his colleagues. He's going to have his own opinion, and he said he likes to have messy meetings. I think that means everybody explains themselves, and I think they'll end up probably with the best choice that everybody agrees to.
Is the Fed under Warsh going to be less independent than under Jay Powell?
I mean, I don't see it that way. Okay. I think that you've got a committee. Warsh is going to come in with his own strong views, and they're going to have discussions about that. Administrations always like easier monetary policy, especially going into elections. I mean, that's just noise in the background, I think. And certainly you've got the committee that's going to continue to be looking at the data the way that they've been doing. Data dependence versus something else, that's a question, because he sort of said, I think data dependence is a little bit too noisy, and you need to remain true to where you think the economy is going over a trend-dependent kind of way. And so that's going to be another important question for them.
I know you're not the Fed Chicago president anymore, but how do you read inflation right now? Because the most recent number, personal consumption expenditures price index, is coming out, I believe, Thursday, tomorrow, looking at about 3.8%. It's creeping up towards 4%. So, I mean, from your assessment, does that mean maybe a hike is more on the cards than a cut?
So I'm more troubled by the fact that inflation has just continued to be stably above 2% now for quite some time. And there are reasons why that's been the case. The tariffs had an effect. You would expect those to be transitory, but then along comes, the Middle East war conflict, right? And who knows what comes after that. And I think the longer that takes place, the more that the public gets nervous about inflation. Even if inflation comes down, a lot of prices will not change.
Gas prices,
and so they could be at a high level. And now all of a sudden the household's going to go, my wages haven't gone up commensurate with the higher prices that I'm paying. And you could see general dissatisfaction there. And so, that could cause them to demand higher wages, more costs, more inflation, and things could go on for quite some time. So those are concerns. But it's also the case that inflation came down from its highest levels, but there wasn't a recession. The funds rate, it was at 5.25, but that wasn't the highest funds rate either. Yeah. We managed to get lucky. Things unwound. Transitory wasn't transitory, but it wasn't permanent either, and so there was a lot of unwinding. But would it unwind to 2 or unwind to 3?
That was different.
I don't think we really have a great answer for that yet.
That was different inflationary pressures, though, really. This is now the war and the oil shock and gas at the highest level right now. And
but in 21, 22, we said the same thing. Oh, this is a one-off, right? These supply shocks, semiconductor chips, this will be transitory. And then we found out that the supply chain got messed up. Well, the supply chain's at risk now, right?
Yes.
Not quite the same, but it echoes, which is something that makes you nervous about. Labor was scarce during that time period. Firms had a hard time hiring. Wages went up. Those costs got pushed on. So we don't see that. That's a good thing. But, you got to monitor that and be a little bit nervous. Even if, what if we get stuck at 2.5? Yeah. Is that good enough? That's a key issue we need. Kevin Warsh has said we need a new inflation framework, and part of that undoubtedly is going to be how you deal with inflation. Not exactly where it's supposed to be, but headed in the right way, or not.
You know, he's talked about regime change at the Fed. He's talked about reducing the balance sheet. You don't think that that necessarily is the issue that absolutely must be tackled? It might be an impossible job to get back down to what, 800 billion that it was back in 2008. I mean, it swelled up to $9 trillion in 2022.
I mean, 800 billion is like hoping that buggy whips come back, right? I mean, that was just ancient history because markets are a lot bigger, the economy is a lot bigger. But lower balance sheet, okay. I mean, you know, that's a worthy objective. He wrote a Wall Street Journal opinion piece in January of 2025 where he said, you know, wouldn't it be a good thing if the balance sheet went back to where it was in 2019? That was way south of where we are now, and the Fed is actually growing the balance sheet because there's too much volatility in money market interest rates unless you start to grow in line with the economy. And so it would really take quite an ambitious program to reduce reserve demands by banks, which would be an important feature for getting the balance sheet down. That is not a short process. It's also a process with a lot of risk. And so while it may be a worthy goal, it's going to be costly and take some time.
Yeah.
If you thought that the balance sheet was an important contributor to inflation, as he wrote about in that op-ed, that's got to give you a little bit of pause with inflation as high as that. Is that the new inflation framework? He called it practical monetarism, and I think that's something that is worthy of greater discussion.
Well, one thing that's been having a lot of discussion here and every conference I've been to recently is about the impact on the labor market that AI is going to have. How do you look at what all these executives in the banking industry are talking about, adopting more AI to sort of replace certain levels of workers? Are we going to see, from your vantage point of having been at the Chicago Fed for 16 years, you look at the labor market trends, if we're going to have significant underemployment or unemployment caused by AI, what's going to be the impact on the U.S. economy?
So, I mean, obviously there are risk scenarios where there would be substantial reductions in employment for all of the reasons, AI reasons that you're talking about. Certainly, corporate earnings calls, executives are pointing to, right-sizing their employment base by using technology. It's a little early, it seems to me, to be giving, high props to AI for all those efficiencies. But you can use it quite well, and people are doing better with that. What will be the employment consequences? If they are substantial, this is really a structural change in the economy. This is something that monetary policy isn't going to be able to correct. This is a little bit like, this is akin to the 1970s where the unemployment rate went up and policymakers kind of go, oh, that must mean that, there's slack in the economy and, we should be accommodative towards that. Well, unfortunately, it was a structural increase in unemployment because labor markets weren't matching workers as efficiently as they did before, and you couldn't do anything about that, and we got more inflation. And so I believe that in the case where AI leads to substantial material reductions in employment, you need the government to help out with some reform programs of some sort, businesses to come together, perhaps in consortiums to work on that issue, but it's not monetary.
Right.
And there will be a lot of pressure on the Fed to respond, but you got to be a little concerned that would lead to greater inflation if that were the case.
Maybe even in the first term of Mr. Warsh, because these bankers are talking about this is happening fast.
I mean, the other thing is, people are comparing this to other waves of innovation, like steam engines, and digital.
That created jobs.
And things like that. They did eventually, but over a 20-year period, they created jobs. But in the first 5 years or so, it usually wasn't working out that well with the affected parties, right? And so that's the part that you're talking about right off the bat.
Charles Evans, thanks so much, former Chicago Fed president. Appreciate your time here on Bloomberg Television. Okay, guys, more coming up from the UBS Asia Investment Conference.
All right, Stephen Engel there in Hong Kong. Thank you. Well, as memory shares surge on AI demand, Samsung got a further boost after its largest union voted in favour of a pay deal that's going to hand chip workers an average bonus of about $340,000. For more, our Seoul Bureau Chief Kat Barton joins us now. So, Kat, does this mean the strike is off?
Hi, yes, it does. This morning, the union and Samsung held a signing deal. 74% of the union, which is Samsung's largest labor union, voted in favor of this deal, which was negotiated right down to the wire. They came up with this agreement literally 90 minutes before they were due to start a walkout that could have been incredibly disruptive for global chip supplies. So Samsung and the union are both very happy this morning. As you say, this could hand huge payouts to workers in Samsung's chip division. There are 78,000 workers, and according to Bloomberg calculations, each of them could be in line for an average payout of $340,000. So yes, the strike is for now averted.
Well, very nice if you work in the chip division, but is everybody at Samsung happy with this deal? Because if you're not in the chip division, what's in it for you?
Yes, exactly. There's growing internal discontent within Samsung. So workers who make the company's mobile phones, washing machines, other finished products in the DX division, they are really not happy with this. They are looking at much smaller payouts under the terms of this deal. They could be looking at payouts of just 6 million won compared to their colleagues in the lucrative memory chip division, who could be looking at 600 million won. So it's a huge discrepancy, and it's fueling a lot of internal tension. And also, we have smaller unions who have filed court injunctions in a bid to kind of block implementation of this deal. Although what we're hearing on the ground is that it's very unlikely those will succeed. So for now, even though there is growing discontent, and Samsung is obviously going to have to really work to get everyone back on board, but the deal will go ahead.
How about the implications for global chip supplies? Obviously good, but are there any potential downsides to this deal?
For global chip supplies, this is very good news. Prices were already high due to tight supply, so the fact that there will not be an 18-day walkout is great for them. The downsides of this deal are more specifically for the South Korean economy. South Korea already has an incredibly hot housing market, especially in Seoul, and these huge payouts could really, both fuel inflationary pressures and then pile pressure back on the Seoul housing market. The other risk is obviously, financial stability, inflation down the line, but there's the risk of spillover, because we have other big companies here like Hyundai who have very active unions, and they're now looking at these agreements. Samsung's was approved today, but then there's also been one by SK Hynix, also agreeing huge payouts from their AI excess profits to workers. And the risk is obviously that other workers will be demanding payouts of a similar scale, and this could spill over both into other major chaebol in South Korea like Hyundai, and then also even down into small and medium enterprises, down the line into Samsung suppliers. And that obviously will be raising issues and concern at the Bank of Korea later this year.
All right, Seoul Bureau Chief Kat Barton, thank you. We have plenty more to come. This is Bloomberg. Welcome back. You're watching Insight. Texas Attorney General Ken Paxton has stormed to a blowout victory in the state's Republican Senate runoff, handily defeating four-term incumbent John Cornyn. Now, it sets the stage for a November showdown with a well-funded Democrat, James Tallarico. For more, we're joined by Bloomberg government editor John Herskovitz. So, John, what does the victory for Ken Paxton say about President Trump's grip on the Republican Party?
It shows that Trump is really in control of the party over the base. This is the third incumbent that Trump has knocked off over the past few weeks in primary elections, Cassidy in Louisiana and Massey in Kentucky. So, he is, if you go against Trump, you're run into trouble. And with Cornyn, he actually voted with Trump almost all of the time. His fault was not being as enthusiastic as much as a supporter of Trump as Paxton. The other thing about this is it's what's been going on in the Republican Party for years is the death of the establishment Republicans. In Texas, the establishment Republicans are embodied by the Bush family. The last of the group was Paxton. Last of the group was Cornyn. And this is kind of the nail in the coffin of the establishment Republicans, who go by the nickname of Rhino, Republican in name only, among the MAGA base.
Well, as we look ahead to the midterms towards the end of the year, how's the Senate race in Texas shaping up between Paxton now and the Democrat, James Tallarico?
Yeah, I mean, there are lots of interesting numbers, lots of contrasts at play. If you're looking at fundraising, Tallarico has done really well. $27 million in funds over the first 3 months. This is probably more than any other Senate candidate will amass for the entirety of their campaign. Paxton had to spend heavily in the primary and the runoff. Texas is a huge state, huge media markets. I think he's at about $7 million in his coffers. Before the Trump endorsement, Tallarico was ahead of Paxton in polling. But the bigger picture is Texas. A Democrat has not won a statewide office since 1994. A Democrat has not won a Senate election since 1988. I think it was Lloyd Bentsen was the last one. Republicans have come out charging against Tallarico, using familiar languages as a far left radical. But Paxton has a lot of baggage, a lot of scandals, which make him a bit more vulnerable than an establishment person like Cornyn.
All right, well, for those who aren't familiar with them, can you tell us about some of those scandals that Paxton has faced?
Yeah, it's quite numerous. It goes from a personal, he's faced security fraud allegations and indictment, which the case has been settled. He was impeached by the Republican-dominated Texas House for allegations of bribery and abuse of office. The Republican-dominated Senate in Texas didn't convict him. His wife has filed for divorce for what is known as biblical reasons, inferring infidelity. These things were part of the Cornyn campaign, showing that he has so much baggage, he's unelectable. Tallarico, on the other hand, is a Presbyterian seminarian, someone who's very familiar with the Bible, can talk about Christian beliefs, something which plays quite well in Texas. So you have these contrasts of candidates. Cornyn was seen as the stronger candidate against Tallarico, but the big picture is Democrats haven't won in Texas for a long, long time for a statewide office.
Well, thanks very much, Bloomberg East Asia Government Editor John Herskovitz there. Let's get to some of the stories that we're following. Volvo has confirmed a Bloomberg scoop that it's reached a deal with the Trump administration to avoid a US ban on vehicles tied to China. Volvo is majority owned by Zhejiang Geely Group. The agreement overcomes a barrier that has effectively blocked the US market from Chinese cars over national and economic security concerns. And Bloomberg has learned that China is restricting overseas travel for top AI professionals at private firms, including Alibaba and DeepSeek. Sources say some individuals now need approval from relevant authorities before heading out of the country. The move highlights how AI talent is now seen as a strategic asset, but risks undermining the ability of AI firms in China to recruit and retain talent. Plenty more to come, including this interview. Nobel laureate Simon Johnson is going to join us from the UBS Asian Investment Conference in Hong Kong, and we'll be asking him about AI, jobs, and whether it concentrates power next. Got some breaking news for you out of Taiwan. Taiwan prosecutors suspect that 3 individuals did successfully smuggle at least one shipment of Nvidia AI chips to China via Japan. These 3 people have been accused of allegedly falsifying documents relating to exports of supermicro computer services which contain those advanced Nvidia chips. Of course, exports of those Nvidia chips to China are banned, but Taiwan prosecutors suspect that At least one shipment got through via Japan and into China. You can get more on that story on your Bloomberg terminal. Well, memory stocks are leading the charge in equities today. Let's get to market reporter Anthony Stevens for a closer look at the drivers. So, Anthony, let's talk about Micron joining that $1 trillion club. How's it overnight performance playing out across Asia today?
Yeah, that was a blockbuster report from UBS on Micron. They tripled their price target, and their price target is pretty much double where Micron was just last week. So Micron popped 20% overnight, and the read-through from the kind of dynamic highlighted in the report is showing up in Asia. So you see Hynix pop double figures, and now Hynix is a member of the $1 trillion club as well. What's very important in the report is they highlight that US hyperscalers are giving up their pricing power as purchasers to get stable supplies of chips. Now, this basically sets up a very long pipeline of sales for these chip makers, and that visibility of business is what is driving the share price gains today. So it's not only Korea today with Samsung and Hynix obvious beneficiaries, it's moving into Taiwan and even China to a lesser extent today. So this team really supporting equities across the board in Asia today, and people are drawing the line from memory to what kind of chip materials go into memory as well.
So what's next for the memory trade? Because this rally is not really showing any signs of slowing down.
Yeah, we've had a couple of headlines in Asia that show, where it can kind of start to struggle. Xiaomi was on the tapes talking about the struggles it's having with memory prices when it came out with results. That kind of mirrored Lenovo's comments as well. So, on the consumer side, there are signs that there is going to be pushback on the pricing power of the kind of the less complicated chips that go into the day-to-day appliances we use. On the AI front, China has two huge IPOs coming up in the middle of this year for domestic AI memory makers. These IPOs could cash up these Chinese players and allow them to increase production that could suppress chip prices down the line. But this is quite far in the future. For now, the only thing getting in the way of further gains in the memory space is the fact that they've rallied so hard, so fast. So from a flow perspective, it becomes harder for investors to continue to pile into this space. One other thing I'd like to highlight is from an index concentration perspective, Samsung and Hynix are such big parts now of both the Korean exchange and MSCI benchmarks that people will need to keep an eye on how big they are as a percentage of overall portfolios.
All right, Bloomberg Markets reporter Anthony Stevens there. And as industries navigate the adoption of AI, Mizuho Financial Group CEO Masahiro Kahara says the bank will reskill some employees instead of laying them off.
There will be certain jobs that will be replaced by AI. That doesn't necessarily mean that we will lay off people. We will try to reskill them. I think and there are certain parts of our banking system where people can be utilized actually. If where you need dialogue with people, you need empathy with people. Definitely, we need people for that. So that we can reskill them, I think.
UBS Group's Asia-Pacific president says artificial intelligence will free up capacity and improve productivity while also having an impact on jobs. But Iqbal Khan told us the impact will be less severe if improved efficiency can help grow the bank's clients and its business.
I think the opportunity that we're seeing now with technology and with AI is very much around simplifying, speeding up the processes, not cutting corners, but actually fundamentally improving the process, consistency of process. Just think about documenting source of wealth of an individual. It's a pretty complex task. But if AI can help you contextualize that and help you actually do that and ensure that there's consistency, you're going to fundamentally improve the process in addition to what you're doing today.
Nice segue, AI. It's in everyone's discussion book right now. Obviously, we just had Jamie Dimon of JP Morgan talking about that. We've heard some comments that he got a little bit of blowback. Bill Winters at Standard Chartered saying it's going to have a significant impact, obviously, on maybe some of the rank and files in the banking industry. How do you see AI over the next couple of years changing the way you hire and who you hire?
So let's step back, right? I mean, clearly there's a lot of focus on AI. We see high valuations around AI. There's a lot of talk around the value chain, everything from actual LLMs to data centers to the respective foundations, infrastructure. For us at UBS, we've been very focused on AI, specifically also led and driven by Sergio Ermotti, our group CEO. We've implemented, for example, Copilot across the board as just one example. And I have to tell you, in the last 6 months, I've been using it more myself, and I've been using it personally as well as professionally. And it's actually made me more efficient, more effective. And I think over time, everybody will become an AI native. It comes down to adoption and application, fundamentally. We look at this as something that will really enhance and increase capacity. What does that mean? As we become more productive, we can use that capacity to grow. We can use that capacity to serve our clients better. Imagine at UBS, when you come in through the door as a client, you get onboarded. And if you're eligible to getting a solution or a service from a compliance and regulatory perspective, it comes down to, is that valuable to you or not? And we will serve you. Now, all of that process is curated, semi-automated, manual, people-driven. You can AI-fy that, if that's actually a word today, right? And as you do that, you can create a lot of capacity. And that capacity can be used to serve clients even better and grow.
What does it mean about top-line job growth? Do you cut back to get more efficient? How does it work? And how do you communicate that?
Look, at the end of the day, as I said, I think it's more about productivity and capacity. Now, if we can use that capacity to serve our clients better, gain more share of wallet, grow faster, grow more, then the impact on costs and jobs is going to be less. Now, if we cannot, and this is an industry-wide topic, then of course it will have ramifications and implications on costs and jobs.
That interview was from the UBS Asian Investment Conference in Hong Kong, where our own Stephen Engel now joins us live with our next guest. Steve.
Yeah, we're going to continue that conversation about AI with Dr. Simon Johnson, MIT Sloan School of Management Professor of Entrepreneurship and the Nobel laureate in economics in 2024, along with Darren Asamolu and also James A. Robinson. Darren I spoke to at the UBS event in China just a few months ago. A great conversation about AI, and obviously you have a lot of thoughts on it as well. Is AI going to be the great job destroyer that many people in the banking industry are talking about, hedging their comments and maybe not communicating as well to the rank and file?
So Daron Asamolu and I work on this a lot. We have a research center together at MIT. We've written a book, Power and Progress, on this issue. And I think there's a danger that AI, in its automating form, in the form that displaces workers, will predominate, whereas what we're arguing for is using AI to strengthen human expertise, to increase the demand for human expertise, and to allow you to expand into new areas, because that will actually strengthen employment.
You said many good jobs, though, are going to be lost. You say it's looking increasingly dark. How do we stay away from that worst-case scenario when, I guess, the complaint is that the larger companies are going to be able to get richer because of it, and the worker is going to be left behind?
Well, this is exactly where we are right now, which is the automation part of AI is moving ahead pretty much at full steam. And the new job creation part, the part that creates new tasks, the part that expands what your company can do, is being somewhat neglected. Now, we think that's mostly about corporate executive decisions. It's easy to replace people. It requires more work to think about the new frontiers. But you need to think about the new frontiers. And there's tremendous value to be had there. There's a lot of profit to be had if you can bring the latest ideas out of universities, commercialize them, turn that into manufacturing. And Hong Kong and China have got a great opportunity to do this, but so does the US.
Yeah, I was strumming through the book in 2023 that you talked about, Power and Progress, right? Yeah. Over 1,000-year struggle over technology and prosperity. You argued that tech does not automatically create good, right? The benefits go to a narrow elite, right? China seems to have a different approach to AI as well. They're worried about that kind of progress going to the corporate elite. So they would like to see a more disbursement, if you will, especially in younger, unemployed people who can kind of do one-person companies through agentic AI. Do you see a completely different, bifurcated AI development and philosophical approach to AI between the US and China?
No, actually, I think there's convergence.
Really?
I mean, maybe the rhetoric is different. The US doesn't quite talk about as much about the opportunities for young people yet, but it's coming. And I think both teams, if we can call them that, are pursuing the technology, the frontier. They're realizing the automation is real and dramatic. But what are the people, where are the good jobs going to be? So I think both US and China have got their own political grappling with the same issue.
Have you come up with that calculus? Where are the good jobs going to be?
science, new innovation.
But not necessarily coding and software.
Right. So obviously some of the tasks within existing businesses and also new businesses are being taken over quite effectively by AI, and coding is at the forefront of that. But what you do with coding, how you use computers, there's still a huge amount of work to be done there. And there's great value if you're a computer scientist, but not if you're, let's say, a relatively lower level programmer.
So, with this agentic AI, how transformative could this potentially be in China, which doesn't have access to the most powerful Nvidia accelerators? They have lots of young engineering talent. This seems to be giving a new platform for people to grow their businesses on. Have you explored that in depth and how China is approaching it?
Well, absolutely. This is the latest topic, and the researchers like myself are running pretty hard to keep up with the realities. I think that with safeguards and with appropriate management, agentic AI can be immensely powerful. And I think China's ability to build really meaningful technology with, let's say, the less than fully powerful chips, that's actually going to matter a lot for the world. Because when it comes to sharing the technology and disseminating it, there's a lot of other countries that can't afford Nvidia chips or can't get access to them. So China's got an edge a little bit on the export side there, perhaps.
I don't know if you saw the story. We had a Bloomberg scoop today saying that now China's basically expanded their travel curbs to private companies. I mean, we've always known that state-owned enterprises in key areas of national security interest, maybe the top level scientists or the top executives have their passports held by maybe the party apparatchik in that company. But now we're hearing that private companies are having the same kind of travel restrictions. What does that tell you about how strategically important this is to the Chinese?
Well, I think it tells you that everywhere this has become a matter of national security, including where is the talent, can the talent move, is the talent sharing its ideas in the ways that the authorities feel are inappropriate. I do think a big advantage of the US model and what we're building in the UK, for example, is we're very open. We allow people to come, we allow people to go. We're totally comfortable with ideas being shared, and that's what I would recommend for everyone. But clearly the stakes are high.
You've been appointed recently as an AI ambassador in the UK. How do you see the priorities in the UK on how to harness and maybe put the guardrails in AI as well, but also not necessarily see that job destruction that there's a lot of concern that is going to happen in the US?
Right. So the UK is attempting to position itself between the US, which is a sort of anything goes model, and the Europeans, which is like the answer is no. Now what's the question?
Yeah.
So the UK is recognizing that it's not at the frontier of Silicon Valley and it's not big enough to be like China. So where does it play in that global space? Where can they create value? Where can they be useful? What's the public-private partnership that will generate jobs? They're asking all the right questions. Now, these are not easy questions, let me be clear, but I welcome anyone and everyone to come visit us in the UK and look at what we're doing, kick the tires, because we want to bring in private investment as catalyzed by the right public policy decisions.
Where are the areas that we're not necessarily looking at that you are looking at the kind of significant social and economic impact that AI will have? You told me you're writing a new book, Who Rules the World, right? We've seen AI as well be implemented on the battlefield because we happen to have two simultaneous wars going on right now. And the rules of war are changing because of AI as well.
Yeah, so drones have changed the rules of war. Now we have drones that are powered by AI. So it's really quite a different future. And these drones are cheap. So they're easy for relatively smaller countries, less well-off countries to afford. So Ukraine and Iran are both using drones. Russia is, of course, producing a lot of drones that it's probably at this point supplying to Iran and feeding into that conflict. These are massive changes. And I think the key point in Who Rules the World is innovation. If you are innovative, if you can use the innovation that's available off the shelf, move the frontier yourself, apply it to your own problems, which include national defense, you are going to come out relatively well compared to other countries. Now, I don't want there to be more war. I think we're better off when there's less war. But then innovation is still going to be critical in terms of, can you create prosperity? Can you share prosperity in your country at different income levels?
So how is AI changing power dynamics as the great, G2, as people call, between China and the United States?
Right. So obviously we have the G2, two countries pushing the frontier very hard. Then we have a set of countries that have scientific capacity and the ability to innovate and invent new things. That would be in the UK, that would be in Europe, that would be in Russia, that would be in some other parts of the world. They're figuring out or need to get their skates on and speed up figuring out where they position themselves relative to the G2. But then there's a lot of other countries that don't have that kind of innate technological capacity. They have a problem. They have to face up to the fact that many people in their economies will be adopting this technology that will displace workers. Where are the new jobs going to come from in those countries? That's a really hard question.
Well, is there AI or evidence that AI adoption improves productivity exponentially? And how is that offset by what is likely to happen in those job losses that all the bankers here are most concerned about?
It's not exponential at the level of the economy. There might be specific applications where it's a 10x or 100x increase in productivity, but we're not seeing it at the overall level of the economy. So it means there's no bonanza, there's no fiscal cornucopia. You're going to have to work the hard problems of how do we deal with the displaced workers? Where do they get the new jobs? How do we make sure those jobs are productive and they can get a decent wage? That's going to be a lot of hard work.
Is there a bubble in AI, though?
Well, I like to say that there's clearly misvaluation, but is it too low or too high? That's the question, right? I don't know.
Dr. Simon Johnson, thanks so much. Appreciate it. All right, we're going to send it back to you guys from the day one as we wrap up coverage here of the UBS Asian Investment Conference.
All right, thanks very much, Stephen Engel there in Hong Kong. Well, we've just had the Indian markets open in the past few seconds. Let's take a look at how we're tracking. A little bit of weakness at the moment. The Sensex off just 0.1%, although there's a bit more optimism around at the moment. There's news of a few ships managing to transit the Gulf of Hormuz might ease some of the pressure on Indian gas supplies as well. The rupee still pretty soft, 95, 76 at the moment. We also saw coal India losing a little bit of ground pre-market. The government planning to sell as much as its 2% stake in the state-run miner. Right, we have plenty more ahead. This is Bloomberg. Welcome back. You're watching Insight. Well, sources have told Bloomberg that Taiwanese prosecutors suspect that 3 individuals successfully smuggled at least one shipment of Nvidia AI chips to China after first exporting them to Japan. Our Asia Tech managing editor Edwin Chan has more on this breaking news. So, Edwin, can you give us a few more details about what happened, how this was discovered?
Thanks. Yeah, I think what makes this a really interesting development is that when it comes to recently prosecuted or investigated cases of chip smuggling to China, a lot of attention has focused on routes that were through Southeast Asia. And I think Japan is sort of an unusual waypoint for smuggling. And I think this illustrates a couple things. One is that there is obviously huge demand in China for, shall we say, the latest and the greatest AI chips that are now restricted from shipment to that country to fuel the country's enormous AI development industry. And the second thing is, I think, one of the things we've had to come to grips with that's really uncertain is how much chip smuggling goes on around the world. In Asia to China. And I think this gives perhaps a sense that chip smuggling may be a bigger phenomenon than what public records may show.
What does this tell us about how difficult it is to enforce bans like this? And can we potentially anticipate some sort of attempt to tighten regulations?
That's a big question, and I think the general consensus is it is rather hard to enforce. The authorities have, in recent months especially, stepped up scrutiny of this area, and I think more broadly speaking, there is a growing realization that if the U.S., for instance, were to get serious about staying ahead in the AI race, then there's a feeling or a perception that they also have to get serious about scrutiny of the lifeblood of AI, which is chips, specifically really powerful accelerators such as the ones Nvidia makes. All
right, Asia Tech managing editor Edwin Chan there on that scoop. Well, US Secretary of State Marco Rubio's four-day visit to India ended with promises of deeper cooperation between the two countries. The US, Japan, India and Australia have launched a maritime surveillance initiative for the Indo-Pacific region as foreign ministers of the so-called Quad grouping met in New Delhi. So let's get more from New Delhi with our government reporter, Sudhi Ranjan Sen. So, Sudhi, is the Quad relevant again now?
Well, I mean, at least, by the outcomes that we see, it is the Quad countries are trying to come together again and make the right kind of noises. We've seen a Quad maritime surveillance initiative being launched. There is an infrastructure initiative around ports that was launched. And also, importantly, there was an energy security initiative that was launched. The energy security initiative in particular is very, very significant in the current context because it talks about building reserves, strategic reserves in the countries of fuel, and also is looking at, how do you get emergency supplies in case crude oil supplies are again disrupted. Now, having said that, these are all very great initiatives, but how do these get implemented and how effective these become in the days to come is going to be the test for the Quad.
So Marco Rubio's visit came at a time of somewhat tense India-US relations. Has this mended ties a little bit?
Well, it has mended ties, and but there is still a lot of road that needs to be a long way that both sides needs to go, because fundamentally there is a lack of trust in New Delhi, and while New Delhi, what we heard from the minister very clearly and officials we have been speaking to is that while India is very keen to keep working with the United States, it is also looking very carefully at whether these are only empty words, and therefore it is looking at very concrete actions. What kind of actions come out from the United States, from Washington, addressing the core interests, core Indian interests. So that is where it is. Of course, the four-day visit has gone a long way to repair the ties, but to say that the ties are back to normal or where they were, say, prior to President Trump's second term, that's still not the case.
Sudhi, could we anticipate any movement on the US-India trade front when Narendra Modi heads to Washington later this year?
Well, I mean, the indications are that both, it could happen anytime. We're going to see the representatives from both sides, trade representatives from both sides meeting shortly. The indications are that the gaps are being narrowed. It's the movement is positive, but having said that, and looking at the experience that India and the United States have had in striking the deal, because India was one of the first countries to go reach out and seek out a deal with the United States, and then the momentum dropped because there was no kind of meeting ground between the two as the goalpost kept changing. So let's wait and watch.
All right, Sudhi Ranjan Sen there on the Quad meeting from New Delhi. And that is it for Insight. Horizons Middle East and Africa up next. Keep it here with us. This is Bloomberg.